Thank you very much, Mr. Chairman, and I, too, would like to thank the witnesses for joining us today. I appreciate the fact that you have decided to convene this hearing. I think this is a very important topic, and I couldn't agree more that fundamental tax reform is critical to maximizing economic growth and solving our really very, very challenging budget deficit problems. So I'm looking forward to this discussion. I also want to reiterate my appreciation for your interest in pursuing a budget. I really strongly believe that is a fundamental responsibility of not only this committee, but the full Senate, and I certainly hope we will pursue that. A couple of the three items, really, that I would hope we can explore this morning in particular with respect to the tax code. One is efficacy, especially from the point of view of maximizing economic growth. Achieving a healthy economy. A second is fairness, which is something that the testimony from the various witnesses touches on fairly extensively. And then finally, some specific reform ideas. Let me just briefly touch on each of these if I could. In terms of a tax code that maximizes economic growth, we do have some differences of opinion, and some of them are fairly fundamental. Dr. Rogers, in Dr. Rogers' testimony, there's a segment where she suggests that, and I'm just going to quote briefly, and I know you'll have a chance to elaborate and comment on this, but you say that we shouldn't worry much about higher taxes having large dampening effects on demand if those tax increases are mostly on higher income households with low marginal propensities to consume. I really wonder if that's not the wrong way to look at the challenge that we face. And I say that because, for several reasons. Number one, my concern is this fails to acknowledge that a lower propensity to consume also occurs with folks who have a higher propensity to invest. And I think that it is investment more than anything else that drives economic growth. Secondly, I think here sometimes in Washington we obsess about encouraging demand, which is encouraging consumption. In fact, prosperity is not equivalent to consumption. If you ask me, prosperity corresponds more to production. And so just as a family or a business that's having hard times, I think we would seldom suggest the thing to do is go out and borrow a lot of money and spend it. Because if you do, you'll have more things, but are they more prosperous? Is that a family or business that's economically in better shape? No, exactly the opposite. A family or business would be in better shape if they became more productive. And then they have the ability to consume. So I think consumption follows production, not the other way around. And I hope that we will address how we can find ways to use the tax code to create the greater incentives for more productivity, focus more on the supply side than on the demand side. On the fairness, I think we've got some definitional differences. I rather like Dr. Mitchell's definition that he offered regarding a fair tax system as one that treats everyone equally. I think a lot of Americans would probably find that intuitively reasonable. I would suggest another way to look at it, which is not inconsistent, would be that a fairness involves earning one's reward through honest effort. So that's a reasonable way to look at fairness. We're going to inevitably talk about progressivity, and one of the things that I hear frequently is that we need a more progressive tax code. But I think we should observe that by the most meaningful measures, the tax code has never been more progressive than it is today. And our tax code is more progressive than virtually everyone else in the world. And the most meaningful measure, I think, and I'd like to hear the witness' view on this, is the ratio of income taxes paid to income earned as a percentage of total income taxes paid and total income earned. I think that's the most meaningful metric. And by that metric, certainly the top 10%, I think virtually any subset at the high end is at an all-time high, or very nearly so, and the trend is unambiguously upward. At the same time, we have the greatest percentage of Americans ever, or at least in recent decades, who pay no income taxes whatsoever. And so that combination being the case, it strikes me as odd that people's notion of fairness is that we need further concentration, greater percentage of Americans who pay nothing at all, and a greater percentage of the total burden concentrated on the people who are paying the most already. That strikes me and many people, I think, as a little counterintuitive. One last point on the fairness is something that I think is really important, and that is the income inequality. There's no question that's real. It has grown. It's big. I think we ought to ask ourselves, what's the cause? And it seems to me the biggest contributing factors are a substantial number of Americans who, through a lack of adequate education and skills, and in some cases habits, simply aren't able to fully participate in the economy and aren't able to enjoy the many opportunities that are out there. And we ought to be asking ourselves, what can we be doing to help these folks fully engage, fully participate, and fully benefit? But it's not at all clear to me that confiscating more income from productive Americans does anything to help those folks who are not fully able to participate. Lastly, on the specific reforms, I agree with several of the points that the chairman made. Certainly maximizing growth with a system that's consistent with most Americans' idea of fairness. I think that's probably the most important objective. I think it's also important for the government not to be picking winners and losers, for politicians not to be deciding what activities should be subsidized and which ones should be favored and which ones shouldn't. I absolutely agree that the goal to achieve those things, we should be broadening the base and lowering rates. And in my service on the Super Committee, I proposed an approach that was consistent with what the bipartisan commission have looked at, and one that would in fact have broadened the base, would in fact have lowered marginal rates. And in fact, I've been a big fan of a mechanism to reduce the value of deductions to generate offsetting revenue that was developed by Marty Feldstein and Maya McGinnis, which I think is one of many possibilities, but a particularly constructive way to do it. So these are some of the things I hope we'll be able to develop, Mr. Chairman. I appreciate the witnesses, and I appreciate your having me.